Hey everyone, welcome to my weekly outlook. I have not posted in some time. It's been about 2 weeks since I posted my last weekly outlook. And the reason for that is because I was traveling, and for the majority of that travel, I actually did not have internet connection. So that is for the lack of weekly outlooks. I do apologize, but I am very thankful for you guys if you guys tune into this one. And I can go ahead and commit that moving forward. I don't expect any more travel, any more delays or anything like that. So I do plan to be more consistent in the weekly outlooks from here on out. Also, a lot of cool stuff happening professionally. I had an opportunity to work with A1 Trading, a company and just a community that I very much believe in and I really like. So I've been doing some work for them. I do chart markups and analysis and potentially some more content in the future. And I also started working with a brokerage called Oanda, a really big brokerage firm, been around for a very long time, very reputable. I've been now working with them as well. So my schedule is going to be a little bit more busy, which is a good thing. But I do, plan to make these weekly outlooks more often. And I also do want to, branch out and perhaps do some more videos, maybe more tips, something more helpful, just to kind of, give more value besides the, the usual weekly outlook. So stay tuned for that. Basically, I'm just waiting for my schedule to kind of get solidified, see how it's going to look like. And then I do want to, put some time in making those content videos. But for the most part, I'm going to be keeping this weekly outlook pretty short and sweet. I'm going to condense it as much as possible because there's really not much I've been doing lately. So I was away on vacation, and what I usually do when I go on vacation is when I come back, I like to take a week off or a couple of days off just to see how the market's moving, see if there's any new news that have been affecting the market, see if market's reacting differently. And so that's what I did. But for the most part, when I was away, nothing much really happened. So the only thing that was significant was that the U.S. courts went ahead and rejected President Trump's tariffs, but then they went ahead and started appealing that. So the tariffs were back in place. So for the most part, business as usual. When I was back, we did see some employment numbers, and it was a pretty much mixed bag for the whole week leading up into non-farm payrolls. And then non-farm payrolls went ahead and beat expectations. Not really good, right? It wasn't a great number, but we did beat expectations, which the market really liked that. If you look at the dollar on the daily chart here, you can see that reacted up to this 98 dollar level of support that I had drawn out. So in my opinion, I'll go over what the dollar might look like moving forward in the short term, and then obviously in the long term, and how I'm going to position myself, because I do want to start trading again and get active now that I'm back at home, got everything dandy and squared away. So let's go ahead and look at the fundamentals first here. We'll go look at the edge finder here. COT wise, one thing I did notice on the equity indices is that the NASDAQ here, 2,200 long contracts were removed from the market and 125 short contracts were added. So, very minimal change on the short contract, short pressure. However, it was a net change because of the long contracts were being taken away. The S&P 500 as well, minus 6,000 long contracts, but we added 11,000 short contracts to that. So that right there is an interesting read for me. I'll go a little bit into that and what I think might happen with the equity indices, because we are approaching all-time highs. And so I'm kind of, if you're not in the market, if you're not long on the equity indices and you didn't get a good price, I am cautiously bullish on those. So let's go ahead and look at the dollar, or you know what, I'll jump right into the equity indices here. So we are approaching all-time highs on the equity indices, and for the NASDAQ and for the S&P 500. And so I think that once we get to this level, because we are already seeing this bearish pressure, specifically on the S&P 500, we had those 11,000 short contracts added to the market. I would be cautious. I'd probably see for some news flow or something like that can cause this thing to go lower, get a little bit of a correction. Perhaps we stay range bound until the Federal Reserve the Fed has more confidence or more clarity as to what they're going to do with their rate cutting cycle. It still depends, right? So that's what I would look for on the equity indices. I would stay away myself. For the gold, I also don't like the price action as well, right? Sold off here. This was resistance. We reacted off of this one. We never really got there, and then we just sold off here. So this is, or if we're looking at this range from this level to this level, we are at equilibrium. So I don't like, participating when we're in this level here at a 50%, referencing these two levels. So I would pretty much stay away for the gold market as well, unless something new comes out, war tension kind of increases, or tariff again comes in, and those deals aren't being made. Then perhaps that is enough for gold to kind of go ahead and break these all-time highs, and then we kind of get a break and retest of this level, and we keep going higher. Then that'll be a good basis to go ahead and start participating in gold longs. But for the most part, being in this level 50, equilibrium, not a big fan of that. Oil is actually a really good setup that I like, and this is one I've been analyzing and sending over to the A1 trading group here. You can see this is one of my analysis that I did for them. This is this is free to join this, and I do 2 markups every single day. So perhaps you want to join this and kind of get a little glimpse of to what I'm thinking and how I consider markets. Even though I only trade Forex primarily, I do consider all markets because they're all correlated in some way. They are all intertwined. Even though I'm only active on one asset class, I look at everything, and US oil is one that I really like in particularly. Technical, right? If we're looking at a technical basis only, if we put up these moving averages, this is the 50 and the 200 here. The red one is the 200, the orange one is the 50. We sold off here. This was resistance, right? And we've been reacting off of this one. And then if we kind of go down into the 4-hour time frame here, we were kind of just stalling above here. And for the most part, we were really acting as this 50-day moving average was acting as support. And so I really like that. Then we started ranging more tighter, more up closer into this level, and now it looks like we have some strong momentum. So if we get a break above the $65 handle, break retest, then I think we can at least test this 200-day moving average at the 68, 63 level, or we just fill this pocket entirely up here in the 70s. So that is a really good setup in my opinion. Something that could come to fruition in the very near term. And then other fundamental reasons, right? The Ukraine-Russia conflict over there, U.S. sanctions on Russian oil. Another thing is, seasonal demand. It's getting summertime in the U.S., so, people are traveling more, people are using their cars more, or just other commercial uses in general. There's usually a more seasonal demand increase in the summertime. And also one thing I didn't mention in this here, but that's very true, is, in the Gulf of Mexico or in just the coast in the east and in the south, it's hurricane season, right? And there's a lot of plants that are on those coastlines. And if hurricanes disrupt those productions, then the price of oil is just going to naturally increase. You can't really predict hurricanes until, couple days, weeks out. So that's just another reason why I think oil in the summertime, just technical setup here, and fundamentally why this could be a really good setup if it does break retest, and then, we can test that 200-day moving average. What I really wanted to talk about, though, is the dollar. Dollar here reacted off of this $98 handle. And I have a neutral to bearish view on the dollar. However, right now, I don't think that's the case, right? So we acted this support here. We got China and the U.S. having a meeting tomorrow on Monday about tariffs. They did say that they've been having conversations on both ends. They're conversating more frequently, so that is very good for the dollar and for just U.S. assets in general. And also, if we look at the upcoming U.S. data, right, we have these inflation numbers for the U.S., the bottom numbers previous, and then the top ones forecasted. So inflation year over year is supposed to come in hotter than expected, even hotter than expected. And a hotter than expected print would cause the US dollar to go higher. So one thing that a lot of economists are saying is that all the data, economic data up until now, up until last week, is not including all these tariffs that were taken into place. And so now all the data moving forward is going to be a good reflection as to how, certain things will look like with the tariffs in place. I think the Federal Reserve and other economists and other people that are speculating are going to be having a close eye view on the upcoming economic data. In my opinion, if we do get these reads, come in hotter than expected, right, on June 11th, and then you have PPI coming in better than expected as well on June 12th. And then on the June 13th, you have the Michigan consumer sentiment. You have that coming in better than expected as well. So, these, if this starts to beat expectation, the dollar will get some strength, right? We'll go ahead and get some strength on the dollar. Perhaps we hit this level or this level here. And what the Federal Reserve is looking for is confidence that the US economy is not in bad shape, right? So if we get some positive figures, we will get dollar index going up higher, but then that could give the Fed confidence to go ahead and move forward on their easing rate cycle. And if that's the case, right, if we get an indication that the Fed is more dovish, then sure, we get some short-term appreciation in the dollar, but then now you're positioned with a confident Fed to go ahead and start cutting rates, and then you can start looking for short-term opportunities on the dollar. So that is my thesis. That is just a speculation. That's just my opinion on what the dollar could look like in the short term. If we go on a higher time frame basis, like a weekly chart here, or even let's go to a monthly instead, we're still in an uptrend for the dollar. I have this trend line for reference here. I zoomed out too far, sorry. This trend line here, we're still on an uptrend, but look, we still have room to go to the downside. And I do think it's very possible that there can be some kind of news flow to send us down lower up to here. To kind of summarize it, I think with this upcoming data, if it comes in as expected, we will get a short-term appreciation into the dollar. But then you got to be mindful to go ahead and start, considering that the Fed is going to start cutting their rates, and then we can kind of position for that and start shorting it. So that is my opinion on the dollar. And when that time comes, when it's really, an obvious trade to start shorting the dollar, I like to look for opportunities to go in other markets. And I'll just give you a little glimpse as to what I'm going to start considering. If I go back to here and I go back to, we can just do heat maps. Actually, we can do the surprise meter here just to kind of get an overview, very holistic view. You have countries like New Zealand, pound is a good one as well. Those are the two best ones for now, but those are the two economies that are really surprising their economic figures. And you can kind of go more deeper and look into it, like New Zealand here doing well. We got the pound as well. Where is it at? Pound, UK doing really well as well. So when it is time to go ahead and do that, if these countries are still doing pretty well, then I'll look for those setups on those charts. So for New Zealand dollar, perhaps with the dollar going up in the short term, this thing comes down here. Perhaps it tests this 200-day moving average. That's actually a really good trade for me. 200-day moving averages is really good support. So if we get somewhere in this level and it is time to start shorting the dollar, I'd probably buy New Zealand dollar. If it's still really strong, if it's still beating expectations, this right here would be a good zone for me. On the pound dollar as well, something like this, this 3,400 level, or even we go, lower into this level, then I will definitely look for buy opportunities for the pound dollar. So that is my weekly outlook, short and sweet. I hope you guys enjoyed it. Thank you guys so much for watching. Have a blessed one. Safe trading, everyone. Bye-bye.